for a complete deal. I'm not looking for a partial deal. My inclination is to get a big deal. We've come this far. We're doing well. This isn't going to be a small deal with China. This is either going to be a very big deal, or it's going to be a deal that we'll just postpone for a little while.
Now, the US market's optimistic. Ben Phillips is with me, the Chief Investment Officer at EventShares. He joins me from Los Angeles. You heard the president then. It's going to be a big deal or no deal at all. But the way things are moving, at least at the moment, suggests incremental rather than revolutionary.
Yeah, and it's dependent on which day you ask me this week. It feels like it's been a lot of fits and starts, really, since we started these China trade negotiations well over a year ago. So it has been a lot of noise, I guess, this week. Really, I've heard people saying that it looks like we're going forward, and then we hear they're leaving early on Thursday today, and so it's been a lot of noise this week. So we'll see if they stay tomorrow and President Trump actually meets with the vice premier. I actually do think that is constructive, but more to that mini deal scenario or truce.
And in terms of the markets, I mean, we should perhaps ignore days like today where you just get a bit of froth and a bit of excitement, which could easily just evaporate at the first whiff and probably do a lot more damage.
That's right. I think on both sides. I mean, this current weakness in the U.S. economy and the U.S. markets was caused by U.S. and China trade disputes and other trade disputes globally. So the confidence crisis that you're seeing in markets and institutional investors, and why you're seeing just a little bit of nervousness, is because of policy. And if you see the policy go either way, I think that's what's going to be the catalyst for the market in the next leg, up or down.
Ben, on other matters, should we be concerned when we look at what's happening with the Fed and the way they are starting QE because liquidity is low because of the rundown of the balance sheet? I mean, are these not all the sort of problems in the plumbing that were always forecast to happen with QE, but could make the transmission of monetary policy very difficult?
It's a great point. I think that's absolutely right. Like we've gone into this neo-Keynesian, if you want to call it that, or just overly aggressive monetary policy that's really unprecedented in all of human history. And so we don't know what the unintended consequences are going to be, but I think we're seeing the first cracks, really, and you just pointed them out. It's liquidity. It's everyone heading for the same exit. There's not as big an exit as there used to be in many markets, credit markets, junk bonds, investment grade, and treasuries, and even repos. So, yeah, we're seeing, banks' balance sheets are smaller these days, and that's why.
But why is that? Because even allowing for the Fed to be running down at a very measured pace its balance sheet, why is there a liquidity issue at the moment?
Well, the thing last month was pretty unique, where we saw, tax payments due, and we saw a big Treasury issuance. So there were two major events that took out almost $100 billion of liquidity out of the global financial system of dollars, right in kind of one day, almost over a two-day period, really. So that was a pretty unique event, but the Fed wasn't right there to step in and kind of alleviate that pain. And so I think people kind of missed that there were these interesting factors causing liquidity to come out of the system. So now the Fed's reintroducing that liquidity, and I think they're going to be more thoughtful about that short-term market.
Finally, if we look at the market overall, it's pretty much done nothing this year, and it looks like it'll continue. I mean, I'm sure some people will disagree with me. They'll point out a few percent here or whatever. But I think, by and large, compared to previous years, I suppose we should be grateful that we're not down on the year so far, with less than a couple of months to go.
Yeah, we have a few months to go, and we're up. Don't sell that short. Like, we have had a good rally, but if you look at the 1 year number, we are kind of flat over a 12-month period. So we had a lot of pain in Q4 that was baked into buying lower in January. So that's why we are up year to date. But fair point.
Ben, always good to see you. I appreciate your time, sir. Thank you very much.